Hello, everyone. Vincent Briatore here. Today, we're going to talk about something a little different. Many times people have asked me if I also invest in traditional investment vehicles like stocks, bonds, mutual funds, yada, yada. And so I was going to share today my favorite stock. Actually, I'm going to give you 5 or 4 different stocks that, that are my favorite. But this particular one is my absolute favorite, and it's one of the highest and best performing stocks of the past decade, really. Not only that, but it has had an incredible performance past few years as well. It has kind of worked against recession and always performed well, and it's poised to continue doing so. Okay, and also I'm going to give you guys some tips on effectively trading on a margin when you're talking about stocks, where to find the lowest margin rates, what that even means. And, overall, diversifying your investments. You shouldn't just be in crypto. If you're talking about wealth building long term, it's a good idea to look into stocks, to, obviously do your own research and stuff and do whatever you're comfortable with. But I'm going to kind of give you like my strategy, how I do things. I'm a little bit more tolerant of risk, if you will. But then again, it's also my, age range. I'm still relatively young. So, I know where I want to get. I know where I am. There it is. So anyway. Let's get started. My stock that I'm talking about here is, the ticker number is TDG. Many of you guys who are seasoned traders are familiar with the stock. This is Transdigm Group. Okay, this company is an aerospace company. It's actually a conglomerate. So it started in the early 90s, and these two bought up a bunch of different aerospace companies and now represents kind of a monopoly on aerospace and defense technology, specifically like the ignition devices and different parts, engines, all kinds of stuff that has to do with commercial and military aviation. Okay, these are huge DoD contracts. Think Halliburton, that sort of thing. But they're huge. They're huge. They have a huge revenue. We're talking about 15 to 20,000 employees. It's a really good company, and it's one that, they have a lot of patents. So I think it's like 65 to 70% of their business comes from just servicing the parts that they put out, because nobody else can do it. So when you're talking about monopoly, you're talking about more than just being huge. You're talking about literally they generate a lot of revenue just repairing those parts. But anyway, let's just get into the interesting stuff, which is historic returns. That's what you really want to hear about, right? So from, like, say, 2006 to 2019. Let's start from 2019. So last year, it returned 64%. That's an increase of 64% just one year. 2018, 23%. 2017, 10%. 2016, 8%. 2015, 16%. 2014, 21%. 2013, 18%. 2012, 42%. 2011, 32%. 2010, 51%. 2009, 41%. So you get the picture here. These are all green, positive years. It's a really good trend. All of the major, kind of advisories and analysts either call this a strong buy or hold. There's constant new money flowing into this. A lot of hedge funds are always putting money and moving their positions around with this one. It's just it's a really good company, and it's one. Well, when I say really good company, it's really good as far as investors on return on investments. So if you're thinking about getting into stocks, there's all these little apps and stuff that you can do. Definitely put TGD in your portfolio. After, obviously, you look at the company profile and look at the returns yourself and make a educated decision. Now, what do I mean with, like, what do I consider the best brokerage accounts? Okay, so I've tried almost every brokerage account that's out there, minus these apps. I haven't really done any of the apps. Maybe I've tried Robinhood, actually. But, I've done everything from Fidelity to Charles Schwab to E-Trade to, Merrill, Finch, all of these. I've done them all, okay? What I try to look at, okay, when I choose a brokerage is I want them to be able to do a 2x margin. A lot of places like M1, the only margin 35% of your capital. What does that mean? That it means that by law, if you have at least 10 grand, they're giving you a margin, meaning it's leveraged. It's leveraged against the 10 grand. They'll give you 35%. So you're trading at $13,500, right? But a lot of them will give you a 2x, meaning if you have 10 grand, you can leverage, you're trading $20,000. But their margin rates are insane. So a lot of these, like Charles Schwab, you're talking 7, 8, and 9% fee for the margin. So what does that mean? That doesn't even make it worth it long term. Like if you're making a short trade, you can use it. But if they're charging you 8 or 9% to have a margin that's per year, you're gonna have a really hard time making any profit. On average, on the S&P 500, you're talking about 9-10% returns. So it's gonna eat up all your profits. So no, that's not worth it. Maybe with TGD, because the returns are always usually higher than 10%. But even then, you don't want to gamble. So you're going to find the lowest rate on the margin rates. What is the lowest rate? Well, the lowest one is Interactive Brokers. Now, that's a little bit of an advanced platform. I think the minimum is 10 grand to open an account, but it is worth understanding and how to use it. Their margin rate is 3.5%. Okay, so think about that. You put 10 grand. Now you're trading with 20,000. Okay, the fee on that 10,000 is only 3.5%. So then you get a year, say it goes up, 50%. Now suddenly you got $40,000 in that account minus $1,350 that first year. Agapito. So anyway, it doubles up. You just roll it over. You keep buying. Obviously you're not going to invest in one stock. You want to diversify your portfolio specifically in different sectors. But what I'm saying is I'm just giving you an example of how money can really go, and it can grow fast when you have the right picks, okay? Consistency, dedication, impulse control, and picking the right stocks. And a lot of people pick a ton of stocks. Man, I don't. I keep, anywhere from 5 to 10 stocks. And if I find something new and it's exciting, I was in Ulta for a little while. You might laugh, but for a while they had really good decade. You get in, change your positions. There's no reason to have more than 5 or 10. Research enough until you know that these are good companies and it's something that you can stand behind. Obviously, my main focus in day trading and doing all that is cryptocurrency. But when I think about long term, you got to hit the trifecta: real estate, traditional vehicles like stocks, bonds, whatever, and cryptocurrency. If you hit all three of those and you focus in on whichever one, tickles your fancy, you're going to get a lot further. Why is this? Well, for me, it helps. Like if I don't do active trading, if I'm not making investments, I'm not watching things and doing research, I'll end up spending money. So it really helps me be more frugal when I'm watching all these things. It takes up my time. I get excited. I'm actually, balancing my checkbook. I'm looking how much money I can put in here, how much that's going to be on a margin, what I can do with the crypto, what can I do with that, and the real estate, and all this stuff occupies your time. So you're spending that time researching and investing rather than spending. And soon enough, you'll find yourself in a position where you would rather invest the money than buy yourself a $20,000 new car or whatever, because you're going to get more joy out of seeing those numbers rise and having that feeling of security. When you talk about building wealth or even just, a couple $1 million for retirement, it is not as difficult as people make it out to be. Key is you need to live beneath your means and detach yourself from this society that pushes consumerism on you. People want money because they want to spend money. I say it all the time. And you got to detach yourself from that and start accumulating for the sake of accumulation, for the passion of seeing it grow and what it can do without necessarily having to do it. I'm happy knowing I can buy the Lambo. I don't have to buy the Lambo. Start thinking that way, you'll get ahead. So, that's kind of just my perspective on that. You guys want to look up a few other ones? Another ticker is ABMD. AVGO, and URI. Those are other three that I keep in my portfolio. You guys can do the research on that. It is what it is. It's not easy out there, so I want to do a different video, kind of share with you guys other things that I do, and I can dip in a little bit with real estate. But then again, I've touched base on that before, but I've never really talked about, stock investing and Interactive Brokers and margin and stuff like that. So I figured I'd give you guys a no-nonsense rundown of kind of how I distribute my assets in my pursuit of, world domination. It sounds funny, but it's kind of true. So anyway, that's that. Oh, yeah, the news just came in. I think Kobe Bryant died. Kobe Bryant died in a helicopter accident. What are you going to do? I don't think I've ever seen him play, to be honest. But it's always sad when someone who's young dies. But then again, I don't know the guy, so I feel sorry for everybody that dies in the helicopter. I'm telling you, no matter how much money you have, no matter how much success, in the end, everybody is going to die eventually. And you don't know when your day is going to come. So try to enjoy it. But you don't have to enjoy it by spending money. You know, you can enjoy it in the pursuit of money. And in the end, you know, it's about the journey, not the destination, right? Who said that? Maybe it was me. Anyway, thank you guys for tuning in. As always, you know, buy red, sell green. Anyway, do I have anything else to say, really?
You can keep me down. Introducing myself, I'm Stephen Gorkin, live out to my calling. And I'm moving in stealth, I'm not for the bullies and that's just a warning. Can be saved by